everybody. Welcome to this episode of the Moving Markets Podcast. It is Tuesday, the 2nd of April. It's been a little while since we've been online. In fact, it's been since last week. Took about a week off, had some things going on last week that kept me incredibly busy, but we're back and we'll be doing podcasts for all of the rest of this week through and including Friday and back onto a very normal schedule for next week. So glad to have you here. We're going to talk about the market sell-off, talk about the employment reports that are coming up throughout the rest of this week. Maybe talk a little bit about what's causing the markets to roll over a bit and talk about the trades that we have going right now. So hope you enjoy today's episode. Make sure you go online, check us out at sostrades.com. Still having an incredible start. We ended the first quarter. We ended the first quarter on an amazing note. Had a great run for this first quarter, like all the markets did, but we more than doubled the pace of the three major indexes. So really good start to the year, and we expect to continue that into second quarter. But make sure you take some time to check out everything that we offer at sostrades.com, and please enjoy today's podcast. Well, right out of the gate today, the markets were down and down dramatically, and they remained down throughout the entire day. There was a couple of times during the day where things tried to bounce back a little bit. If you look at this one-day intraday chart on the Dow Jones specifically, you can see that it just right at the open, it just sort of collapsed. 45 minutes into the trading, it tried to come back a little bit, then it was down again. Tried to have kind of an end of the day rally, and it actually did come up and kind of finish the day in a little bit better shape than the plunge that it took in the early part of the day. But still, the Dow was down 1%, 396 points down. And if we were to take a look at a chart of the Dow Jones Industrial Average, you had this amazing first quarter, a couple little dips, a little bit of a stall through the first part of the month of March. But, going from, here's January 1 right here, little flat to start the year, and then it's been mostly uphill. This pattern has not really changed dramatically, other than the 20-day moving average flattening a little bit right here. The overall pattern, if you were to just trace the 20-day moving average, it really has not deviated much since the start of the year. That's a relatively steady, kind of straight, not straight up, but sort of a pretty straight pattern. And you got to be careful that you don't read too much into just a couple of days of trading. Last week was a strong week on a holiday shortened week. A little bit of a sell-off yesterday, a little bit more of a sell-off today. That's not a big deal. We had a few days of sell-off a month ago. We had a couple of days of sell-off only 2 weeks ago. We had 3 days in a row of sell-off just barely 3 weeks ago. So it is what it is. You just gotta look at it in context. Now, with all of that said, I do want to point out something that I think is potentially, you don't want to read, like I mentioned, you don't want to read too much into just a couple of days, but at the same time, you've got to be aware that we could be reaching a point where this market might tip and it might correct a little bit. I heard several people this morning as I was watching, almost every morning, I go back and forth between CNBC and Fox Business News, depending on who their guests are or which program or which hosts are on there. I do a lot of flipping the channel back and forth. I have people I like on both channels. But I heard people over the last several trading days, I'm starting to hear more guests and analysts and, quote unquote experts that are starting to agree that number one, the market may need to tip a little bit and that a correction right here would be a healthy thing. But the other thing I'm hearing that is maybe should be a little more concerning than a possibility of just a regular technical correction is the fact that less and less people are in marching step with the Fed claiming that they're still going to cut rates 3 times this year. I'm hearing more and more people from some pretty diverse backgrounds. These are not all people of one political persuasion. These are people that, some of them manage very big portfolios. Some of them are analysts for specific stocks. I'm hearing a variety of different people with slightly different backgrounds that are getting on the same page and saying inflation looks like it's rearing its head back up a little bit. Gas prices and oil prices are going up. I'm going to talk about that a little bit in a minute. And bond yields are going up. And these are all indicators that inflation is not just going to continue to be sticky, but it may come back around and start accelerating a little bit instead of slowing down. Remember, inflation for the last 2.5, almost 3 years has never stopped increasing. The rate of increase has slowed down, but inflation has continued to go up every single solitary month since Joe Biden took office. That's just the reality. I don't care about your politics. That is a fact. Has it gone up as fast in the last 12 months or last 9 months as it peaked out in July? A year and a half ago? No, the rate of increase has slowed down. But don't ever confuse that with inflation. Prices are still going up. Things are still getting more expensive every single solitary month. And people are getting nervous about it. Let me swing back around a little bit to what I was just talking about with oil. Gas and oil prices are back on the rise. We had a little bit of a reprieve. The fact that oil, this is actually after market prices and moves, oil is back up into the mid to high 90s, depending on whether you're looking at West Texas or world prices. It's back up into the high 80s, mid to high 80s. I think it's going to be back up over 90 very soon, and I think we're going to steadily through the summer march back up towards $100 a barrel for oil. There's a few companies that are going to do really well with that. ExxonMobil was one of the small number of companies today that traded to the upside, Chevron, Texaco. But other than those couple of companies, those handful of companies that might benefit from that, everything else could struggle, simply because when the price of oil goes up, the cost of everything goes up. Everything. Because even if you're getting a product or a service that may not be directly impacted by oil and gas prices, I promise you it is indirectly impacted. Let me give you an example. A lot of people would look at bananas were in the news last week because for the first time in a really long time, Trader Joe's had to increase the price of their bananas. So that made this big, well, not big. It made a news story that was interesting for a day, but then it got talked about for another day or two. So if you want to take something as simple as bananas, when the price of oil goes up, the machinery that is used to spray the plants, the machinery that is used for the workers that have to go and pick, the machinery that is used to transport the bananas, the trucks that have to ship it across the country, even the stores themselves that have to turn on lights and run electricity for air conditioning and for their refrigerators and for their lights. Oil affects all of that. So even if you think about, well, what does oil have to do with something like bananas? It has everything to do with it. Think of something that is not a physical product that you buy, but a service that you get. Okay, I have a physical cell phone, but I pay for the service through T-Mobile. That's where I pay for the service. T-Mobile has to send trucks all over the country, all over the world to maintain their network, to maintain their relay stations, to maintain their cell towers. They have to have lights on in their buildings. They have to have electricity burning for all the different stuff that they do. Even companies that may not feel directly related to oil, I promise you, they are tied into it. Everything in our lives, the cost of it is going to be affected by oil. So you cannot ignore this. If we look at these oil prices, and I'm going to take a 6-month view on this, we had a nice drawback and a nice reprieve back in November and December. And remember, this is when the stock market was doing this. November and December, it was going crazy. It flattened a little bit through the end of December and January, And since the early part of January, it has been on a relatively steady climb. Now, it's a bumpy climb. There's ups and downs, and it can go back and forth a little bit, but that's a pretty big move up this year, especially from a percentage standpoint. And I think that's going to continue. And I think we're going to be back above 90 within another week or two. And I think we're going to be at 100 before we get to the month of July. And that's, you got to pay attention to things like this. This is going to affect our markets. So not only could we be in for something of a technical correction, and I do think it's overdue. I think it would be a very healthy thing for this market to just slide 7, 8, 10% at the most. I don't want to see it go more than 10%, but a 10% correction I think would be incredibly healthy for the market. If a natural technical correction, though, has no, well, pun very intended. If it has gas thrown on that fire in the way of high gas prices, then you could see upwards of a 20% pullback, which takes it into a technically bearish market. That's not just a pullback. It's not a technical pullback. You would see enough of a drop in the indexes that we would be in a technically bearish market. Don't think for 1 second that can't happen. Now, I don't want to be doom and gloom. I'm not hoping for that. I hope something happens and gas prices start to flatten again a little bit or come back a little bit to the downside. I hope oil prices, come back down a little bit. But I just have a feeling it's not going to happen. So be prepared. Now, I could also be wrong. We could have a natural correction. And if oil prices rise, but they do very, very slowly and they don't go up quite as fast as what I'm thinking they're going to, maybe that's not a lot of gas on this fire. And maybe a 10% correction would be about the max. And then it'd be a great time, absolutely wonderful time to buy back in heavy on some things that have taken a little bit of a hit. So you got to be careful for that. Later this week, I'll end on this note. We've got on... let me get the right part of this up here. We've got on tomorrow morning, we've got ADP employment report, and then on Friday, the full employment report. Either or both of those could really be a market mover if they paint a picture that is less attractive than what we're wanting. I personally think the private payrolls report is a more accurate one. The employment report can be skewed badly by adding a lot of government jobs and a lot of part-time jobs for people who are already working. And whatever administration is in office, they'll try and spin that to make it look like a positive thing. I pay attention to the ADP report tomorrow, and when we do our podcast tomorrow afternoon, we'll talk about those results and what happened. I don't know that tomorrow is going to be a continuation of this sell-off. I do think if the market rebounds a little bit in the next few days, we may get back up to an only slightly bearish week. But I think we're going to start the first quarter of April with a little bit of a bearish week, maybe the second week of the second quarter as well. Then 2 weeks from now, we really get into the heavy part of earnings season in those last 2 weeks of April. And we'll see what happens then as the earnings kick off with the bank stocks beginning at the end of next week. So we'll talk more about that in some upcoming podcasts. I'm going to wrap up right there. I hope everybody has a great day. We're back on a normal schedule. We'll do a podcast every day this week. We'll do every day next week. And kind of get back to a normal schedule after the little hiatus I had this last week. Thanks, everybody. Hope you're having a great day. Bye-bye.